Hello everyone. On today's episode, we'll be discussing single bond strategies in the current volatile macroeconomic climate and how investors can use Treasury bond ETFs to diversify their portfolios and minimize risk. With the recent influx of short-term Treasury bond ETFs, many investors have found themselves seeking out single bond strategies as an answer to the macroeconomic challenge. Treasury bonds are typically bought by opening accounts on Treasury direct or brokerage firms such as Charles Schwab, but this route comes with its own set of challenges. According to Dave Nadig, financial futurist at VettaFi, it can be a complicated and painful process to rebalance a portfolio of bonds, as there are a number of products offered on the Treasury direct or brokerage firms, from zero-coupon bonds to 15-year notes expiring. To this end, investors should consider ETF products such as U.S. Treasury 10-year ETF, UTEN, U.S. Treasury 2-year ETF, UTWO, and U.S. Treasury 3-month bill ETF, TBIL, or a competitor's ETF products, which offer similar exposure and are easier to rebalance. Currently, the 2-year Treasury, US 2Y, yield has fallen by more than 4 basis points to 4.86%, despite seeing a return of 43 basis points this year. The firm FM Investments, a $4 billion multi-boutique investment advisor, has recently announced the launch of 6 single bond ETFs. The 6 bond ETFs include the 6-month, 3-year, 5-year, 7-year, 20-year and 30-year. The launch of these ETFs was due to the increasing demand for Treasury bond ETFs and their proximity to their face values, which appeal to many investors. Additionally, investing in bond ETFs gives investors the opportunity to diversify their portfolios and minimize the risk associated with single-issue blowups, such as the repricing of a Treasury bond or an economic recession. Dave Nadig suggests that investors should not only assess their stock/bond ratio, but should also consider the role of other counter-correlated assets such as the equity in their home or a managed futures product. We hope this episode gave you insight into single bond strategies and ETFs as a way to diversify your portfolio and minimize risk. Thanks for watching.